You watching me? Don't be watching me. No, I'm gonna do my show. Yeah. No, I'm doing it. I'm doing the thing. No, I'm supposed to be quiet right now. Oh, 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 we're live. Hi. Hi, I'm Russ. Welcome to the Russel Journal Nightly Edition, where we go over basically the headlines for the day and talk about what happened in the stock market today and see if we can get some sort of idea as to what's going to happen in the stock market tomorrow. Starting to love things over here. Got me a little fox over there, and got some nice new graphics and stuff going on. So things are kind of progressing over here. We're getting more and more profesh, if you will. With all of that being said, a few caveats. One, per the warning signs, not financial advice. This is just an opinion and conversation around the stock market. If you're going to buy and sell stocks or options or anything of the such, you need to do your homework. All right, we're going to move right into things pretty quickly. I titled this video, "How Did I Get Things So Wrong?" Basically, my two calls in the stock market were the reverse of each other. So what we're going to do is we're going to go over here. We're going to start with the technical analysis part of the show today, and then we're going to come back and we're going to talk about the headlines and why they matter, and then where we're probably looking, where we might be able to see ourselves go in the next couple of days, and you'll get the feel of a few things. So without further ado, let's jump right over to Webull. If you are interested in trading or learning how to trade, I don't really teach trading. I will talk to you about it, give you some pointers and resources as to where to go. You will need a broker. So you will need to get yourself Webull or something like it. We have a link in our description for your connection to Webull. It's good for free stocks. You get yourself free stocks for signing up and putting some money in the account. So I highly recommend you go ahead and do that. All right. So we're going to start today on the 5-minute chart, because what I want to talk about is today, which is this black bar right here, and yesterday, which is this black bar right here. Okay. So on Sunday, my prediction was obviously this pullback. I nailed this part with my prediction where I said we'll have a flush into the open. We'll catch a bounce. And then what I thought would happen was it would continue in the downward direction, thinking that this rally was premature and didn't have much steam and stuff like that. But we caught this wave up. It stayed up. It kept going up into today. And as we went for higher highs, I also said, okay, so today I think this bull rally has some steam. It's going to keep going. It's just going to keep running. And I said probably a little flush, which if you look down here on the 5-minute chart, slight move to the downside. This candle in the first 2.5 minutes was red. In the last 2.5 minutes turned very, very green. Caught this move to the upside. And then we proceeded to sell off. This is, oh, by the way, this is IWM. A little late to deliver that information. So this is what I thought was going to happen on Monday. And what happened on Monday is what I thought was going to happen today. All right. So what the hell happened? Okay. And now we're going to go back. We can go ahead and pull the chart down. We are going to talk about the news and news catalysts and things that had happened throughout the day that sort of brought this whole thing, made it come full circle. So I'll stop sharing that really quick. All right. So beginning yesterday, we had this whole Santa Claus rally. Things looked really good going into next year. Everything was really on the up and up. And then we got some COVID news. Very first COVID news was Omicron is going to be, Omicron is about 58% of all of the cases in the United States right now. So if you were here about 2 weeks ago, And you saw the first guy in California and the second guy in Minnesota. It took about 2 weeks to go from those two guys to now the majority of cases are from Omicron. Okay. Where this really hit home today was Apple. Apple announced closing their New Jersey stores. Okay. Now, one of the things I want you to understand is Apple is like a $2.7 trillion company on their way to being a $3 trillion company. They make up a large percentage of the S&P and of the NASDAQ. Okay. So if Apple goes down, those other two go down. Those indexes are very heavily weighted towards Apple. Okay. So when Apple did that, started selling off, started pulling back, and that just weighed the other indexes down, and that weighed heavily on things like IWM. Okay. It turned into a very risk-off day. The second thing that happened is, okay, and I promise I want to, but I'm not going to go into this. The dollar is showing signs of strength. Okay. One thing about the inflation is that's a weakening dollar. We're looking at a dollar that today seemed to want to deflate. Okay. One of the things we're going to tell you about this, go ahead and do some research on it. One of America's major exports is actually inflation. And the way we do that is everybody else's currency is pegged to our currency. Okay. So now what that really means, stronger dollar usually means lower stock prices. Okay. People start, again, really fast, if you got millions of dollars, right? If you have $1 million, right? Forget that. Let's say you have $100 and you're going to save your $100, but the inflation rate is 3%. That means for your $100 every year, if we inflate 3% every year, your $100 is worth $3 less. Okay. If you have $1 billion, right, and the inflation rate is 3%, that's $30 million that you will lose to inflation. So what rich people don't want to do is lose money to inflation. So if the inflation rate is 3%, they go ahead and put their money in places where the interest rate is 4, 5, 6, anything above 3%. Sure, they lose that inflation dollar, but they still stay above it, or at least they try for at least 3%. Okay. So the thing is, though, if inflation is coming down, or if we have a strengthening dollar, right? If that's something that's going to happen, then rich people are just going to hold cash. They're rich. They have no problem with cash, right? So what happens is they go ahead and yank their money out of the stock market because I have cash. Okay. So now the other thing that also leads to, okay, there's another piece of this that's a problem, and that's China's weakening housing market. Okay. Housing prices are on the downtrend over there. They've been on the downtrend for a couple of years. And now when they were very much on the uptrend, so you can get me on that, but they've been on the downtrend, and basically Evergrande, the largest real estate company or real estate development company in the world, is defaulting on a bunch of loans. Them and a bunch of other very large real estate development companies are defaulting on bond payments and loans. And so you have a collapsing sort of real estate bubble over in China. And with the weakening dollar, we export that we have a strengthening dollar. We don't have those extra dollars that we create to send to China. So China's going to have less money to pay off all of that stuff. Okay. This is a problem. So it's a pretty good time to not be in stocks if you're very wealthy. Okay. So they're pulling out of the stock market for that. Okay. Now these are the two best explanations for the downturn that I saw today. The truth of the matter is, from what I've seen of the news outlets, they're all pretty confused. Nobody has been able to put this together. I don't even know that what I'm saying here is 100. I know these are both very relevant issues in the market, but as to what caused the downturn today, they seem like the best possible explanation to me. It doesn't really seem like, it doesn't really seem uh like some of the other stuff. And we saw today that like everybody, I watched everything, I ingested basically, was all over the place. They were talking about projections. They were more focused on projections for next year and not really looking at today. Okay. Now, overall, the Dow closed at an all-time high again. The S&P did not, came off the top, and some of the sell-off from where we closed today doesn't really look that bad. The price action in today was pretty gnarly. If you ask me as a trader and what we've seen, that was pretty wild price action. And I need to go back over here and look real quick. Where are we at? I need to see the VIX, and even the VIX, the volatility index is down around 17. So it's not saying we're that volatile, but that price action was pretty wild. And I can put up a bunch of other traders who would all say that was weird. Maybe not wild, but it was weird. It was weird price action. Where did I get all of this so wrong? Well, there's two things. One, I really didn't pay attention that much to the news cycle. I've kind of been ignoring it. If I'd have focused a little bit more on what was happening in the news, I would have realized Monday would have been a completely up day, and tomorrow or today would have been more of a sell-off, risk-off event, and I would have put those together. I did not. So I'm not even going to backpedal. I missed it. Okay. And again, that's why this isn't financial advice. It was my best read on it, and both days cost me money. So not that much. I was able to survive. Okay, now we're going to go do one last part of this. I'm going to go share this screen one more time. Make sure we're up here. Can I get okay. All right, so we're at the volatility index. You can see it's way down, whatever, doesn't matter. We're going to go in and look at this, and we're going to go pick up the daily. So you can see, let me move this out so we got some room to make some stuff happen. All right. So again, we're on this big bull run up. There's a couple of things I want you to notice if I can get it to do it without moving things over too much. There we go. Okay. Those lines will be my guide. Okay, so we're here and here. There we go. All right. So, pull this down. Couple of things I want you to notice on our Fibonacci. Okay. First of all, we're here to here. We're still above this line, right? Which is not exactly where I had it from yesterday. It's a little closer right there. We came below there a little bit, but we stayed above here. So we've got support up here a bit. So and this is the SPY, this is S&P 500. So we can still see this move up possibly to the 50% level right there. That's a pretty good move to see happen on this extension. So we're holding this bottom one at 23%, which is fantastic. So we did stay within that. So we do have some pretty good confirmation that what's being used on this bad baby right now is definitely you've got Fibonacci levels being traded on. So that's a good information to have. Again, probably if we see a retracement, it'll be down to this level at 472. If we see, but hopefully if we catch some decent news tomorrow, Omicron's not that bad, or, China decided to become America now, America 2.0. We could see this thing rip. Vaccines cure cancer, something like that. We can see that move up. So with a bit of good news tomorrow, if we have some good news, if it's negative, count on a risk off event going down. If it's positive news tomorrow, count on a move up. Back to my favorite one, obviously, again, back on the daily, look at exactly what I said happens. I said we're going to get to the 50. There's a possible chance of rejection. We are getting rejection here. If momentum's gone, we going down. So now that's not to say we are going down, but it's a pretty good indication that we are going down on this one. Just because it's, first of all, it's the small caps going in the new year. People are really focused on the large caps. There's no stock buybacks or anything like that happening. So the other thing about it that you can see is on the daily, huge volume, less volume, less volume, less volume, less volume, red volume out. Again, look at where we have it again. Big green volume comes in, red volume, and then all of a sudden we get this selling coming down. Okay, so you can see where the patterns repeat, large amounts of volume come in, get these spikes up, and then we get these huge red days. So it's pretty well possible that tomorrow is going to be pretty nasty exit day for here. Again, that's going to be depending on the news. Tech, again, we've still got our lines where we are. Support is still, resistance is still acting as support. I'm going to give you one more line right here, right in here. That was resistance. I'm going to give it the proper line style. We're going to look for this time to hold. Okay. We're going to look for this resistance to become support to see if tech and the NASDAQ can hold up. Okay. Right now, my prediction will be for 398 coming down. And if we break below that, we can see even lower. See even lower tracement to the downside. But yeah, right now that's what I'm looking at. Seeing a pullback below 398 somewhere in this area right in here. So that's what I'm thinking. Again, it's all going to depend on good news, bad news, another holiday weekend coming up. However, it is a full trading week, so should be good. Go ahead and shut that off. So should be good for a full trading week coming up this week. We got 3 more days, so fingers crossed we make that money and ring in the new year very green. Other than that, you guys just remember to plan your trades and trade your plan and respect your risk and have yourself a good night. All right, everybody?